Hey, this video is an update for my subscribers today. We've got some positions on, but if you've been following me in my free Telegram group, you will have also had an opportunity to copy these trades this week. So you might find it useful. If you're not in my free Telegram group, please have a look in the description below and you can click the link and join. Okay, back to my subscribers. It's been a struggle over the last week or two. We've been waiting for a trend to develop. One thing I usually can do is get on a trend pretty early. Of course, sometimes they don't turn out to be trends, but I think this week we're doing all right. So the idea was to get onto a short dollar trade. We spotted the opportunity on Wednesday, but I waited for a better entry opportunity, which I think we got yesterday. The trades are starting to work today. I'm going to run through where we are now on the trades and projections going forward, because I think these trades could be worth running. If you've got any questions, put them in the comments, and of course, I'll answer them as quickly as possible. Okay, so the whole strategy is based around the US dollar being in a bear trend for the 2025 so far. As you can see from the 4-hour chart, the 200 period moving average is working really well. Just to note, this looks now like a bear flag. You never quite know until it's completed, but it looks like it was. We broke below the moving averages, which was a good support level, and I was buying the dollar there at the beginning of the week. I had to. It was a good trend line, good moving average support on the 4-hour chart, but I had to be prepared to stop out quickly and reverse. So I stopped out of the trade, or I got myself and my subscribers to stop out of the trade earlier in the week. The week didn't start well. We had some small losing trades, but that's just the way it goes. Even with hindsight, well, I would still have bought the dollar there. It could easily have bounced up to the 38.2% fib at around 102.50 in the dollar index. Anyway, the dollar index broke lower. I waited on Wednesday. I didn't chase this move. I waited for a bounce on Thursday, and we caught this around here. There were one or two trades that we entered which had small stop losses as I tried to catch the move, but we did well. We got into all the short dollar positions that I wanted to get us into by the time we touched this 200 period moving average, and now the dollar is in decline. So it's starting to look pretty good. Here's one of the trades we entered. Now, this was not quite so clear cut, but it was a great way to get exposure to a short dollar position. Dollar Swiss, we broke below what was a good support level. And as I said earlier, I was happy to buy the dollar earlier in the week. It was a really good support level around the 83.10 area. We had moving average support on the 4-hour chart. We had confluence of Fibonacci levels. But once we broke, it was clear we had to get out of the trade quickly. I waited for the bounce. And again, I did try a short around 82.70. I had to, and we did stall there for a while, as you can see if I open up this chart. We did stall there for a while, but eventually we broke up. I had to quickly get out of the position for a very small loss, and that gave us the opportunity to get in around 83.00, and the market's reversing now. So I do expect further moves to the downside. I'm looking for a break below 82.00. It would be lovely if that came today before the end of the week, but if not, I'll have to run the short positions over the weekend and look for a break below 82.00 next week. Okay, the next position that we actually got onto was long euro versus US dollar. The euro has been in a bull trend against the US dollar, so I wanted to get us into a long position. This has been really tough. I thought this was a topping pattern. We broke down and we did hit our target for the short on the euro US dollar. Then I thought the retest of the trend line was going to be a sell opportunity. Again, great moving average resistance coupled with the trend line. We had to get into a short position, but it didn't give us enough return on the trade. But eventually we broke up. So then I realized I have to get into a long position. Now, again, it was tricky. We moved back below the trend line, and it was the 100 period moving average and the 38.2% fib that ended up managing to catch the move. I thought it would be this big red trend line here. But anyway, our stop was wide enough to allow us to hold the position. And now, again, it's looking really good. The euro is bouncing back against the US dollar. And I'm now looking for a break above this week's high of 113.62 to just give me that signal that I'm on the right trade, and the euro is going to continue to push higher against the US dollar. So if you're holding this position with me, watch for that break above 113.62. It's a signal for us to hold on to the position. A break through 113.80 will be another signal for us to continue to hold on to that long euro position. Okay, the last position I've got us into to take advantage of the sinking dollar is the short dollar yen. The yen looks like it can continue higher. The dollar looks like it will sink. So this was a great pair to get into. Fundamental reasons like the euro US dollar, as well as technical reasons. This looks like a bear flag, and we broke through, again, moving averages and trend line. Yes, I did try a long position here, and I don't regret doing that. I had to. There was great support from the moving averages, the trend line, and also a confluence of Fibonacci levels. Even with hindsight, I would have done that trade again, and I would in the future. But once we broke, that was confirmation that the bear flag had completed. And so I had to get us into a short position. Again, I waited through Wednesday. I didn't chase the move down. I waited for Thursday to bounce, and it bounced nicely to the red 200 period moving average and the confluence of Fibonacci levels around the low 144 area. Again, just like the dollar Swiss, I got into a position slightly too soon, and then we got stopped out of that one, but it gave us an opportunity to get in at a much better level. I'm happy with that. And again, the market is starting to reverse. The short dollar yen positions are working. And of course, I'm going to be looking for a break below the 142.78 low for this week as confirmation that I'm in the right trade, that the dollar will continue to sink and that the yen will strengthen. And then we're going to be looking at testing this low here for May, but 142.33 break below there will obviously be further confirmation that we're on the right track. So I have high hopes that we are going to resume the longer term bull bear trend in the dollar, and these positions really will be worth holding on to if we can. Here's a quick screenshot of the trades. I've also got some New Zealand dollar yen trades in there. I've been buying that really small. As you can see, I don't trade a big account. I'm not really trading for the money these days, but it's decent enough, nice enough trade, a nice enough profit, getting close to £1,000. I'll take that for some extra money. But these are all the trades that we have done this week that I've just talked about, and I'm going to keep running those. So I'll keep you up to date with the progress next week. I have given you targets if you want to take profit, but if you can hold on at least to part of the position, I think in the days and weeks ahead, we should see a decent return on these trades. If you've got any questions, put them in the comments and I will be happy to answer them as quickly as possible. Or if you are a subscriber, you know how to get hold of me directly.